All right, guys, what's up, Wolf Empire? Let's cover moving averages and what they mean to price action, and also look at how these banks and these hedge funds and these billionaires use these order blocks to buy and sell the stock, and how we detect them. How do we detect where they're buying and selling? So when you're looking at a moving average, you can see that the 200. This is a 200 moving average on my chart, and this 200 moving average is it has dynamic color change. So what does that mean for us? It's simple that when you have a 200 moving average, that 200 number in front of the moving average just represents the amount of candles that the moving average is using to calculate the way that it curves up or down, right? So the 200 is looking at 200 previous candles and taking the average of those candles, and is impacts the way this line moves up or down, whether it stays flat. Um, Also, with the 200 moving average, the 200 is known to be used by traders and even people that invest to know whether or not a stock is bullish or if it's bearish. Okay. So on the Wolf chart, our 200 is yellow. And I use this dynamic color change because when it's yellow, that means, you think yellow like bright and sunny. I know somebody use yellow as slow down, but in this chart, it's used to show you that the trend is in a bullish trend. So we turn the color to yellow. And so you can notice, look at the price action of Apple while the 200 is yellow. And also you can see over here, while the 200 flipped to red, you see how Apple was in a strong bearish downtrend. When the downtrend was over, we would know because the 200 flips back to yellow right here, and then it shows us that uptrend, right? And so when you're looking at the 200, you look at it as the long term trend, the long term bias of a stock. So our 200 is going to tell us the overall trend, the overall bullish or bearish direction of a stock. And you can see it being true all throughout Apple. We red here, we're in the downtrend. We're yellow right here, we're in the uptrend. The slope is up. That means you're in a very strong uptrend. When that slope is down, pointing down aggressively, you're in a strong downtrend. And as long as you start paying attention to what your 200 is doing, it doesn't matter what time frame you're on. If the 200 is bearish, then you got to treat the stock as bearish until it gets back above that. And so when you're buying calls and puts, this is important for you to understand what the long term trend is. The other moving average that I use is the 12. The 12 is going to tell us what is the short term trend. So we need to know what the short term trend of a stock is, because even though a stock can be in a overall bullish type of trend, it's still going to have short term pullback. So you have to be able to trade and prepare for the early trend detection and short term pullbacks. And the 12 is a really good moving average to show you that. It also has dynamic color change in our system. And so you can see here when we have a candle open and close above the 12, it flips the color to blue. That blue shows you that we're in a short term uptrend. Closing under the 12, it flips the trend to a bearish, short term bearish trend. That's why 12 turns red. Now, how do you trade this though? So it's one thing to see just the dynamic color change, but what is the signal that's flipping these moving averages from blue to red or whatever? So when you zoom in and pay attention, you're looking for a certain behavior out of the candles to let you know when a trend is going to switch. And so with the short term trend, what you're really looking for is you're looking for a candle to open and close without touching that moving average, right? So you want the candle to open and close with the wick and the body under the candle, under the moving average. The wick is this long, skinny line, and the body is this thick part. You want to see candles that open and close with the body and the wick under the moving average to show you the bearish trend. You want to see a candle open and close with the body and the wick above it to show you that the trend is trying to go into an uptrend. I call these dominant candles. The reason why we call them dominant candles is because even though you see how what is this, Apple open and close this candle back above the 12, we're in this strong uptrend, but then we push down and we open and close this candle under it. And it's a very convincing, dominant move because instead of the moving average being support like it is here, so if we zoom in, you see that the moving average will act as a support line, a dynamic support. So it's moving around and the price is bouncing off of it. When you have a candle open and close with the wick and the body under that, that means you've totally lost the 12. So this dominant candle shows that sellers are serious about trying to pull the stock back for the short term. Now, you use this moving average in conjunction with your long-term trend, and this gives you some of the best results of knowing and trading downtrends, right? So a stock is truly bearish when you see a short-term trend detecting moving average like the 12 get under the long-term trend, right? So like for example, why do I say truly bearish? You see how we lost a short-term trend, the 12 definitely flipped to red. So this is going to let us know that we're finna pull back. And so we pull back to the 200, but the third responsibility of a moving average is to act like dynamic support. So it's a trend detection system. It's going to show you the slope and show you how aggressive we're pushing up, but it also acts as dynamic support and resistance as it's moving across the chart. So when we lose the 12 is going to bring us back down to the 200 as support. Now you see how these candles came under the 200 and they opened and closed under the 200, but they were able to bounce back up. The reason why they were able to bounce back up with this little bounce is because our short term moving average, which is the 12, was not under the 200. So now look at this bearish crossover here. Now the shorter moving average, so the 12 is only looking at 12 candles. So that's why I'm calling it the short-term trend detection system. It's only looking at 12 candles, while the 200 is looking at 200 candles. So you see how when the 12 got under the actual moving average, the 12 got under the 200, which is the thicker red line, and it gave us this death cross on a wolf chart. Now the short-term trend is under this long-term trend. Now look how you get the follow through when the actual moving average gets under the 200, right? You see how we in this bearish trend, and watch what happens when price pops up to it while the 12 is still under the moving average. Now look at this. We pushed up, couldn't break or couldn't hold above it. We pushed up here, couldn't hold above it or get above it. But look what happens when the short-term trend gets back above the 200 and we have a blue 12, which is healthy for a bull trend, and we have a healthy yellow 200. Look how the uptrend is sustained easier. You see that? Now look at this fake out again. We push down, but what is not under this move? What's not under the 200? The 12. So we know if we get candles just shooting down here aggressively, and the 12 is still comfortably above the 200, these candles have a higher chance of bouncing back up and reclaiming the 12 because the 12 isn't under it. Versus over here, when we have the 12 cross under, it's harder for them to get back above it until we get the 12 crossing back up, which we have right here. Okay. So this 12 looks at 12 candles because if you look at a 9 EMA, the 9 EMA is only looking at 9 candles. The 100 is looking at 100 candles. The 200 is looking at 200 candles. And our 12 is looking at the previous 12 candles to try to see what the trend is. And so we use a short-term trend and a long-term trend detection system to know what the trend is overall on the stock. And you use these beautifully together with your order block. So if you know where they're buying it, you know where they're selling at, you know what the short-term trend is and what the long-term trend is, you can put things together to where you can time your entries. The last moving average that we use in the system is the WTMA, and this is our early entry and early reversal signal. And this is faster than the 12. So you see how we came up and made. So when this lime green line crosses over the red line, we call that a bearish arc. And then when the lime green crosses up above the red line, I'm talking about this red line here, we call that a bullish inverse arc. And so we use these faster moving averages. And this faster moving average is called the Wolf Trend moving average. This is a moving average that I invented. And so we use this moving average to get into position earlier than the market does. So it kind of tracks when they make their moves very fast, very quickly on the crossovers and things like that. I'll show you an example of what I mean. So let's go to a weekly chart on Apple, right? So you see how Apple has an order block right here, right? And then we see price push up in this reversal. But so if I was to go in the replay mode and we go look at when price crossed over, so we see we have the Wolf Trend moving average here. And so if I move ahead and we go to a crossover, let's find one. All right, so now we have our WTMA, the Wolf Trend moving average crossing over here. And let's get the final. We got to get it locked in. Let's see where it locks at. All right, so we have I think it's this counter right here that's going to close. All right, so this counter right here. So now when you have a candle to open and close, while the WTMA line has crossed up above the red signal line, which is this red line, now this WTMA is locked in. So that means that it's telling us smart money is buying their position. They're buying in around this price between $202 and $197. So now they're into Apple right here, right? Because we're tracking them with this WTMA. Now you will see that it always comes in before the rest of the market will know that smart money has entered into the stock. So let's look how long. So we knew about it on May the 27th, right? Now we're all the way in June, right? And let's see how long it takes before the order block picks up on the chart to show that smart money was in this trade. Let's see when we get it. So now we had the order block pops up on this counter all the way in August. But with the Wolf chart, we would have known to go ahead and start accumulating our shares way ahead of time. So now by the time they make this move and then this move, we're already in a position far before a change of character or the rest of the general market would know. And this happens in location all the time. Just like we had the bearish arc here, even though we push back up, we drop. We got an inverse arc here. And you will see also the same thing if I go back in replay mode and go back to where the lock candle happened, which is right here. So you see we're locked in now. So we know that smart money is in position on May the 6th. If I run this up, and we just looking to see when the chart will show that an order block pops up, and other people that use smart money concepts would know that they bought Apple. Let's see what date. All right, so now we had an order block in on this candle in June. We knew about them coming into the market in May. So we was a month ahead of them. You see, that's how many weekly candles is that? 1, 2, 3, 4. We were 5 weeks ahead of when the general market would have known that this was an order block. Now, this is important because if you're a person that trades order blocks or you know people that trade order blocks, they like to trade when you come back and retest the order block. But did Apple come back and retest their order block, or would that just be a completely missed trade, right? So they would have to wait a very long time to get a retest of that order block. I'm trying to go through it as fast as I can here, but sometimes, just like this weekly order block right here, never came back down, right? And so with us, though, with the WTMA tracking exactly where the order block will appear and in tracking where they bought in at, we have a unique advantage because we know that on the first attempt, we know exactly when they got in a position right here. The rest of the market knows that, okay, smart money jumped in right here, but we already would know in real time when that process took place. Now I'm gonna be dropping more videos like this, so make sure you like and subscribe to the channel, turn your notification bell on, and leave a comment in the description if you learned something new.